Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. Chicago soybeans. Happy Valentine's Day. 26 weeks ago here, and every opportunity since, I have said, and I quote, "The only other thing to bear in mind is not here on this daily chart, but in Chicago soybean meal." And that is the well-highlighted annual key reversal down we saw there for 2023. Not directly related here, but not worth ignoring either. End of quote. Last week I said, and I quote, "I think with us being now in the second month of the new year of 2025, that I should now set aside this as the world and my charts have moved on, and there are more recent and more interesting features to discuss." End of quote. Well, today I think this is still true. This, though, still haunts me. This thought still haunts me somewhat. Nevertheless, there are three main features I brought up last week, and I do so again this week. The first is a big picture item, and that is the potential we now have for a very large July 2024 to date double bottom pattern, though this past week has been troublesome to this idea. We are nevertheless on the verge of completing the construction of this pattern and also on the verge of triggering the outcome. Thus, if prices break higher over, and here is the bit you need to concentrate, so I'm not exactly sure which I would use, but over the 50% Fibonacci line of the May to August 2024 move at 1098, or the 61.8% absolute Fibonacci line at 1106, then we could have a primary potential up as far as 1195 and a secondary harder to achieve potential up as far as 1235. As I said earlier, this past week has been troublesome to this idea, but it has not extinguished it. The second feature was the possible bull channel that looked like being generated since the break up over the old broken July to September 2024 bearish shift pitch walk in the middle of January. The upper trend line is highlighted in dark blue on my daily chart, as I had and still have high confidence in it, as it has multiple points of contact with the top of the market since late December 2024. However, the lower trend is an issue. As I said last week, and I quote, "However, the lower trend line is only a 2-pointer, and so I have chosen for now not to highlight it. I'll see how this develops." End of quote. This past week, prices have punched down below this lower trend line, and it looks likely that they will recover. So I'll cease discussing this next time and instead concentrate on what the mid-January to date action may bring. The final and most immediate point from last week is that we were then set up to make a weekly key reversal here last week. However, the market faltered at the last point and instead chose to make a lesser outside week pattern last week. We have not seen any major move in either direction as a consequence this week, so we'll have to keep an eye on supports below at the November 2020 low at 1045 and at 1033, as well as the October 2020 low at 1017. Meanwhile, topside, we have the resistance at the 50% Fibonacci line at 1098 and the 61.8% absolute Fibonacci line at 1106 to watch out for as well. Chicago soybean meal. The main recent pattern driver here in this market had been, and I suppose still is, the dark blue May 2024 October to 2024 bearish shift pitch fork that you can see clearly highlighted in dark blue on my daily chart. The market is running underneath the overhead upper time, currently at 315.90. This pattern had previously been breached on the upside in January, but had not been broken, and had also been reinforced by a congestion area further overhead between 323.30 and 326.90, as well as a declining gold long moving average, currently at 322.30, along with the nuisance value, I suppose, of the bright red trendline extension to the July to September 2021 descending wedge pattern, which is currently at 320.40. I also reckon you might include the upper trend line of another feature, which I'll discuss shortly. This dark blue bearish shift pitchfork had been severely tested in recent weeks, and I even suspected that it might not have that long to go, but so far it has held. Looking below the market, we did have support from the mauve medium moving average, currently 306.40, and to a certain degree the bright green short medium moving average, currently at 303.80, but this is now being penetrated, and while the green short medium moving average has, well, sort of held up on a closing basis at least, the mauve medium moving average has not. Neither look that strong right now. We also had until this week an interesting mid-December 2024 to date bull channel that might possibly have morphed into a bullish ascending wedge pattern, currently 309.30 to 332.40. The lower trend line is highlighted in bright green, but the upper trend line is not highlighted as yet. The reason for this is the lower trend was effectively a 3-pointer, whilst the upper was only a 2-pointer. Thus, I had more confidence in the lower trend line. But this confidence was misplaced, as this week prices punched down through this bright green uptrend and are now stabilizing below it. A final feature which I would like to discuss was that we were set up last week to make a weekly key reversal here, which we did. A weekly key reversal down, and this week has seen a pretty good follow-on lower to this pattern. Now, this commentary would not be complete without my discussing the elephant in the room, or at least the elephant in the room which has stayed there throughout 2024, and that is the annual key reversal seen here at the end of 2023. As I said, and I'm afraid I have to repeat something I've highlighted now for 86 weeks, so coming up to nearly 2 years, and I quote, "I now only need to remind you once again of my words of 67 weeks ago," so that's now 86 weeks ago, "and ever since when I pointed out that the Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023, and we have been living in the shadow of this pattern ever since." End of quote. I've also added ever since, and I quote, "If there is only one thing you take away from my musings, let it have been those words." End of quote. That's another quote, I'm afraid. Last week I said, and I quote, "Today as we fully enter the second month of 2025, perhaps, just perhaps, that shadow is dimming and other features might just start to take precedence." End of quote. Well, this week has shown that the shadow cast by that supremely significant pattern so long ago still darkens the skyline of this market. At the end of last year, Chicago soybean oil, by the way, and happy Valentine's Day. At the end of last year, I drew what I called, and I quote, "a new perspective dark blue bullish Andrews pitchfork" that I drew 4 weeks ago, which is now 12 weeks ago, for the mid-August to late November move. End of quote. I've since finessed this into a mid-August to late December 2024 dark blue bullish Andrews pitchfork, with the market in between the overhead middle time, currently at 48.49, and the lower time below, currently at 42.32. The middle time overhead has been tested throughout January on the upside and has mainly held down prices. However, that is not all, and I am somewhat loath to mention this, but that is not the only bullish pitchfork for this move, as we also have a bright red, shallower bullish shift pitchfork operational for the same move. The market is right now between the middle time below, currently at 45.16, and the upper time above, currently at 50.27 for this pattern. In recent times, the middle time has been tested on the downside and has also, more or less, held. And that is where my small quandary is, because I do not like having, as in the case here, I do not like having both the bullish Andrews and the bullish shift pitchforks of the same move on the same chart at the same time. One should morph or finesse into the other, usually, but not here, as both are still valid. Nevertheless, that is what we have, and until something else shows itself, I will stay with these bullish pitchforks. Now, talking about something else showing up, we have an immediate open question here. Is the action since early January today, is it a double top or a bullish halfway hesitation, or is it something else entirely? That is the most interesting question right now. I'd just keep a wary eye on the old congestion overhead seen back in July 2013 between 46.80 to 47.30, as it seemingly is still somewhat influential, even now. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.